Good morning, Predicted Trades family. Hope everybody's doing well. Thank you for tuning in to Prep. We'll do a quick little review. And you might notice that our handy-dandy Beast tool looks a little different today. I stayed up late tinkering with the code last night and decided to change up the color scheme a little bit. So now, our support levels will show green until we lose them. Then they will flip red to show resistance. So we can take a look at yesterday on the ES and see that when the market opened, we had a quick pop up to our midline here where we rejected that resistance, came back for a retest and rejected. I talked about this short yesterday as the market was moving up. I said I'm kind of expecting us to run into a wall. I'm not going to short the first drop, but I am going to short the retest. I also laid out strikes to play on puts, the 411 puts on SPY, the 316 puts on QQQ. Those each went for a triple in this drop, and we nailed the entry on that retest of the midline. Then as you can see, we fall to our open range sell zone, which flipped to green because we were above it, but once we tore through it, it became resistance again. Down to our open level, which turned to resistance, down to our open range buy zone, which for a moment turned to resistance, but then support. Then once we got back through, flips green to support. Basically just change this color scheme to try and help you folks understand what is our local area of support and resistance as price action is moving around. Right? If I short here, what are my targets? Well, first it's to this support, then it's down to this support, and so on. And if I start to go long here, where am I going? It's up to the next resistance, lock in some profit, leave runners. Up to the next resistance, lock up profit, leave runners. Maybe add on a pullback to support. So that's just the basic concept of the changes you'll notice today in the Beast tool. As we look at ES overnight, we rejected our open level repeatedly and it stayed resistance. One last test around, what is that, 10:30, something like that? 9:30. Fell down to our open range buy zone, which was support, and then flipped to resistance. Down to the midline, back up to test resistance, down further. Made it all the way to our destination buy zone, and they have started to reverse it, flipping things back to support. So, we'll see how this goes today, and how you guys like this new color scheme. I think it'll definitely help some of the newer folks, and really just help anybody understand at any point during the day where's our support and resistance, what are we risking off of to get to the next target. Oh, let's switch over to our normal prep settings. And while we wait on that to load, let's pull up our economic calendar for the week. Had nothing yesterday. Today we have a little bit at 9 a.m. and 10 a.m. Some homes data basically all around. A little bit of consumer confidence. Tomorrow we have some durable goods, some retail inventories, and then the big ones on Thursday and Friday. Thursday we have GDP, jobless claims, pending home sales, and then Friday, a little bit more jobs data and PCE. So, market could potentially be waiting for 1, big tech earnings this week, and 2, GDP and PCE. Real quick, let me pull up our earnings schedule. Give me 1 second to pull this up. And this is what I'm looking for. So this is the earnings schedule for the week. We've got like Verizon, GM, McDonald's, GE, 3M, Pepsi, Spotify, all before the bell today. And then the big ones after the bell: Microsoft, Alphabet, Google, right? Visa, Chipotle. Tomorrow, before the bell, Boeing. A little bit of travel, a little bit of energy, ADP. A big one after the bell tomorrow, Meta. A little bit of Roku. As the week progresses on, we've got American Airlines, CAT, Lilly, Southwest, MasterCard, Crocs. Don't forget about Crocs. On Thursday, after the bell, Amazon is the big one. Intel, Snap, Pinterest. These things, Snap and Pinterest might not seem interesting, but there always are interesting reactions around Snap. Usually I feel like Snap reports before things like Meta. I feel like Snap is usually one of the first in the ad space. But either way, very big week. Friday's got some more energy, closing it out pretty much. So plenty of reason for the market to, in a way, kind of stall, kind of go sideways, where we allow some to report. We have big pops, then it comes back. Hey, Carl Jones, seeing your message on YouTube, loving that little beast tool improvement. Great. Glad you're liking it. I think you guys will like it, especially as we start to use it on options as well. But overall, got a big week of earnings. Lots of names that can move the market. Microsoft, Alphabet, Meta, Amazon. These are market movers. Boeing, right? So we got plenty on the earnings schedule this week. We've got GDP and PCE coming up Thursday and Friday. Plenty of data points for the market to kind of go sideways, which shouldn't be much of a shock. We have been going sideways for weeks now, in a way. One thing to note, as we have been in this range for a couple of weeks, the daily 21 has slowly caught up to us. We can collapse this first. Oh, don't start freezing on me. Well, while we wait on that for a second, the daily 21 is this white stair-stepping line. These look like stair steps because it's a custom tool that I made that plots the daily moving averages on any time frame below daily. And over here you can see a daily chart. We've had a good run up, and we've just been flagging for a while. We shouldn't be overly bearish till that flag starts to break, right? We can even drop in a level basically around 4,100 and a level right around 4,175. And that is the zone that we have been trapped in for quite some time. That is the flag that we are trying to break up out of or down. And slowly but surely, the daily 21 has come up to meet us right near the bottom of that zone. The daily 21 sitting around 4126. Just call it 4125 to make things easy, right? And that resistance up at 4175. So we're stuck in a 50-point range here. And now all of our squeezes are settling in around us because we've spent enough time going sideways. We now have 30-minute, 2-hour, 4-hour squeezes on ES. And those are above and below. So as the market is waiting for big tech and these economic data points, we should get comfortable with this range. We could very well be in it. While big tech is reporting, some names are going to pop, some names are going to drop. The market's going to absorb that. In a lot of ways, I think maybe like the average retailer might look at this bull flag that we're in with big tech earnings, and they're expecting a run up into earnings and to break out of this bull flag. Or once we get earnings from a couple of these big names, it pushes us out of the zone and fires the bull flag. Or fires us down. And really, what we need to think about is the market can absorb a lot when it comes to earnings. So what we could find is, as we get through all these big tech earnings this week and these econ data points, we're still in this zone. They let all the reaction happen and they load into the long term, right? So what we could see is tapping the mean, staying in this zone, getting through earnings, and then a ramp up or a ramp back down to moving averages and to establish yet another higher low. Just a quick look on the daily. You can see we only slipped down in October, but since then, higher low, higher low, higher low, and another pullback to the daily 50 or the daily 200, and a hold would be still a higher low. So, as we are coming into the last week of April, right? Friday will be the end of April. We will be into May next week. There's the old adage of sell in May and go away. We are in a bull flag. So, very simply, if we're going to lose this bull flag and start to drop, we're going to likely lose 4,100 and come back to test 4056, which is a huge key level, and now our daily 50 has caught up to it. And if that can't hold, then we're coming right back down to 4,000 and 39.75, a 25-point range that is very key for support and to establish, again, a higher low. So, should we see that sell in May and go away after all this big tech earnings right at the end of April, we'll see this bull flag give out, and those are the targets down. Should we hold after pretty much tapping the mean, which I'm sure we will fully engage this level before the week is out? Could we hold the mean, get through all big tech earnings, and if earnings looks decent, guidance looks decent, we get a rally going into May? Always possible. We got to play what's around us and what the market is giving us. So, for today on ES, we already made it down to our destination buy zone. That pre-market low is pre-market low at 41.30. The daily 21 at 41.26. Call it 41.25. That's your 5-point range of support. Should we open and continue to look weak? Ultimately, looking for us to hold that zone and then try to make our way back to fill this gap down. Could be just a partial fill, not a full fill. We did rally up to the top of these squeezes and closed in them. Now we're going to be opening at the bottom. What that means is they could, before we get going, they might want to retest the bottom a little bit and then take off for a partial gap fill back to the daily 15, daily 8 sitting above at 41.50, 41.54. If we can get through that, then it's up to that 41.60, 41.65, which would be getting through yesterday's high, and then 41.70, 75. But if we keep looking weak and start to lose that 41.25, we'll be at the risk of, really 41.20. So we can get down to 41.25, maybe even 41.20 and still hold up and reverse back up. Below 41.20, we'll go test 4110, 4100. But with the stack squeezes, we typically don't see us dive right through them all day type thing. Usually, like you can see if you just look left, we'll get to the bottom, hold, reverse back up, we'll get to the top, reject, go back down. And slowly, the squeezes will start to open up and fire. So, that's what we're looking at on ES for today. Let's start tearing through these names. Going to try and get through the rest of this prep pretty quickly. NQ, got a key level, 12,960. Did not quite tap it yesterday or pre-market. So we've got a zone of support from that 12,960 to 12,965. Little 5-point zone of support that we might get back down to test. As long as we can hold there or this 13,000, looking for us to get back above the daily 21 at 13,030, back up to the daily 8 at 1385, daily 15, 13,117. Top of that 4-hour squeeze up near 13,150 to 13,200. So those are upside targets. We start to lose 12,960. We want to target down to 12,890 and looking like 12,800 to 12,850 down in the bottom of the daily squeeze. I love this daily squeeze on NQ because what it means is NQ can afford to slip down a little bit. It could hold the bottom of this daily squeeze, and while everyone's thinking that we're about to fire this flag down, it could reverse right back up off that daily squeeze to go visit the top. Basically just meaning this daily squeeze is a big old support that could definitely stop us from an attempt to fall out of this flag on the market. NQ could hit bottom of the daily squeeze and we just reverse right back up. So let's see if we can hold that 960 to 965 this morning and reverse back up, or that 13,000. Start to lose that, then it's down to 12,890, 12,900, and then past that down to 800. Moving on. Ready. So if we look left, Ruddy has been holding up that 1790 a lot each day, and now pre-market rejected all the way down to 1770, and now we're coming back up near that 1790. So what was once support now potentially looks like resistance. Let's see if Ruddy quickly rejects 1790 and comes back to revisit pre-market lows and 4-hour squeeze bottom. As long as we can hold pre-market lows, 4-hour squeeze bottom, looking for it to try to get up to that 1790, break through, turn it into support, and continue the journey back up to 1800, 1805, where we've been topping out lately. If we start to lose 1780 and that pre-market low near 1770, then we want to target down to the bottom of the daily squeeze, 1760, 1750. YM. Interesting on YM, there was a trend line of resistance that we got through yesterday, came back and held, and, pre-market, we're still kind of holding near yesterday's lows. We did set one slightly lower, right near 33,800. Very big key level for YM. So 800 up to yesterday's low, and some of these pre-market lows around 850, 50-point zone of support. So if we reject, say, the daily 8 here at 950 and start to roll over and lose 900, we want to see if 800 and 850 can hold us up and reverse us right back up to get through that 950, back up to 34,000 in the top of the 4-hour squeeze. If we start to lose that 33,800, the daily 21 sits just below at 33,700 and still in the bottom of the 4-hour squeeze. So we can afford a slip below 800, tag that daily 21, and get right back up and keep this 4-hour squeeze intact. NQ already made it back to the daily one. NQ already made it back to the mean, the daily 21. Ruddy. YM, close, hasn't quite tapped it. Same on ES. So let's see if all the indices before the week is out, maybe even today, fully engage the daily 21 so that all indices are reset to the mean going into these earnings and data points this week. Apple holding up above daily moving averages. The daily 21 slowly caught up to 163 in the bottom of the 4-hour squeeze. So if Apple or tech is looking weak and Apple starts to lose 164, likely want to target to that 163 to fully engage the daily 21 and the bottom of the 4-hour squeeze. We can hold up 163 or that 164, and it's just right back up to 165, 166 for tests, for the attempt to break out to 168 up at the top of the 4-hour squeeze. AMD. Just steady down. When does AMD report? Oh yeah, not till May. So next week, AMD will be reporting. This could be a little profit taking before a potential run into earnings for chips. We are well below the mean, the daily 21, the daily moving averages. And we're near this key 86. Let's see if 86 can be support. Start to send us back up through 88, 89. We also have that daily 50 right at 88.5. So let's see today if we can hold yesterday's lows and that 86 level to start to reverse back up. And I think market's waiting on big tech today after earnings with Microsoft and Google. So after that, we'll start to see a little bit more movement and things waking up. Going to keep an eye on chips because they could make a run, basically into the end of the week, getting ready for AMD reporting next week. Amazon made it up to the daily 200 and the top of the daily squeeze, peaked outside just for a second yesterday, and then right back down. There needed to be a little profit taking after this run up and slow grind higher and then blow off the top after getting past the daily 200. Not surprised to see us come back a little bit. We have that daily Keltner at 105 that we held yesterday. Looks like we're still trying to hold it. Should that 105 give out, daily 8 is at 104.25. Daily 15 at 102.75ish, let's call it, and daily 21 at 102. So we start to lose that 105, probably want to target 102 ultimately for a reset to the daily mean. And if we look left to recent high, the high from that drive a couple of Thursdays ago. If we can continue to hold above 105 and take out 106, then it's a play right back up to 107, 108, 109. Let's move on to Google. Oh my, the squeezes are getting tight on Google, and she reports today after the bell. You can see immediate target up 107.5 if good reactions after earnings and recent high. Immediate target to the downside 103 if we have a negative reaction on earnings, and the obvious back to 100. I'm not going to touch this one today. Let's see how earnings go. Meta reports Thursday. Already made it back to the mean after a really strong monster run back up to 222. Pulling back and trying to hold the daily 21 around 210 and that recent low 209.5ish. So that is your support, 209.5. Call it up to about 210.5. So a 1 point range down at the bottom of this squeeze. If we do slip down that support, we can hold, then it's back up to 213, 215. If we start to lose, then it'll be a trek back down to 206 and 200, and with earnings coming on Wednesday. Those are the what I'd be watching, like that 206 and that potential 220 for a reaction that takes it out of this range. Microsoft. Again, like Google, reporting tomorrow after the bell. Had a good run up. We've had some profit taking back. And we've started to fire those 4-hour squeezes down. Yesterday's lows near 278, currently near 280, so a 2-point zone of support. Should that start to give out, then it will be down to the bottom of the daily squeeze, which spans from 274 to 276. So they could dump it down to the bottom of the daily squeeze right before earnings, just to load up for a positive reaction. Again, not going to touch this one today, but we'll see how earnings go. But yeah, I like that daily squeeze. It's much like NQ, even though we are slipping below the mean. Got a daily squeeze there to bounce us back up. Netflix. Already reported earnings and has not tanked, but you'll notice has also not just taken off. This is kind of what I was talking about, where the market can absorb reactions, and then the move starts to unfold about a week or so later. So Netflix didn't tank and is holding up. Slowly, there might be something starting to take shape where they've risked off of 320 repeatedly. Now we're starting to open a little higher. Ultimately, local support, that daily 50 at about, just call it 326. We start to lose that, then it's back down to test 320, that base that we are setting. As long as we can hold 326, looking to get through 330, back up to 335-ish where the daily 15 sits, and 340, the next key level past that. But I'm going to keep an eye on Netflix going into the end of the week. As long as the market's not going to tank out of this flag, Netflix could be a good play. It's already reported earnings. Going to keep it on watch. Nvidia doesn't report till end of May. Made it back to the daily 21, trying to hold around 267.5. That's where your support sits. Yesterday's lows near 266.75. So what, little 75 zone, 75.75 zone of support. As long as we can continue to hold that and squeeze bottoms, it's a play back up to 270, 272 at the squeeze tops. And if we can start to push against that, then up to 274, 276, 280 where we topped out. We start to lose the mean here, then we want to be targeting back down to the bottom of this daily squeeze, back down near 260. QQQ. Little zone of support here that I drew a long time ago. We've made it back to. Ultimately, yesterday's lows near 313.80. We have some pre-market lows there as well, and 314. So a little 20-cent zone of support there at the bottom of that squeeze. If we do get down, looking for that to try to hold. If it gives out, then it's down to 313, 312, 311.5. But if we can hold up here and start to push, it's a play back up to 315, 316.25, and back up to the daily 8 at 317, daily 15, 317.5. SPY. So we got pre-market lows down near 410. We're just going to call it to make it easy. Yesterday's lows were around 410.5. So basically a 50-cent zone of support. We could slip down, stay in that for a while and hold. Little wedge in that area before taking off to the upside or breaking down a little more. If we break down and lose that 409 and start to lose 410, pre-market low, 409.86. Then it's a play down to 409 and the daily 21, which sits at 408.5. But if we can hold up there at the daily 21 or up here at this 410, it's a play off of these squeeze bottoms back up to the daily 15 at 411.5-ish, the daily 8 at 412, the top of the squeeze which starts at 413. Tesla reported and dropped on earnings. My rule is if it reports and drops hard on earnings, I just leave it alone. I leave it alone. It's very, very rare that we have a big negative reaction and open way down on something and it reverses right back up. All too often when this is the reaction of a tank and leave it, that's a sign to me to just leave it alone. This could slowly drift down to third Keltner or below, or something key like maybe 150, before it finally starts to wake up again and get volume and act like it's going to do something. So right now it's just, for me, in a limbo. I'm not going to touch Tesla. And some folks might be thinking, oh, you're going to be missing out on these moves like this and that. And I mean, it's moved a few bucks. Early in the week, it's moved a few bucks. This isn't going to do much for me as far as a risk to reward on options. So I leave it alone. VIX. VIX. I love these gap up and fade downs. And get back up and then fade down. And then we gap up and we fade down. And so, well, let's see what we're going to get on VIX today. Overall, our resistance has been, if we just look left, around this 17.7, we'll call it, and up to 18, right? So if we're going to see more selling on this gap down, we'll likely see VIX stay above 17.5, and this daily 8 at 17.3, and continue up to 18 and the daily 21, which sits up near 18.34 at the top of this 4-hour squeeze. That's if we're going to see more downside on this gap down. But if we're going to try to hold some squeeze bottoms on the market and whatnot and reverse back up to fill the gap, then we're likely going to see VIX stay under 18, reject this daily 15 at 17.8, get back below 17.5, and start the journey for VIX to fill the gap itself. We need to get below this 17.3, and that will give even clearer signs of getting back. So we've got our thesis for upside, downside. We've got targets on everything. That's going to wrap it up for prep. Thank you guys for tuning in. If you're new to Predicted Trades, there's a link in the description of this video. You can join our Discord for free and start to learn our system and how we attack this market every day. We provide an amazing tool that goes on your options charts, number one, because there's pretty much nobody else out there doing what we do on options charts and giving you targets as an options trader to play on your options charts. But our tool works on options, futures, equity, stocks, even some internals. Basically, we put that thing on everything. So thanks for tuning in, folks. If you're new, come check us out. There's lots to learn. And if you're already a member, we definitely appreciate your support, and we look forward to hitting some great trades with you today. Good luck to everybody, and we'll see you in the chat.